So Pete's right in terms of the resilience of the markets and the strength of the buyers coming in. And I'll just reiterate that by telling you, at this point in the rally, we now have 40% of S&P 500 names back above their 50-day shorter-term moving average. A month ago, the number was 0. We have only 23% of S&P 500 names above their 200-day. So still less than a quarter of the market is back in what you would consider to be an intermediate-term uptrend. But again, a lot of healing has already happened there. Two things I'm watching that I think are notable. First is the XRT names. Maybe we ran out of sellers for retailers. There's a lot of resilience there, and I think that's somewhat encouraging. And then the oil patch. This is interesting. The XOP is actually up on the day. That's the producers. There's not enough place to store all the oil we have. And so when you talk to oil people, they're pointing out that front month is not really indicative of the real market. Look at June, et cetera.
That's right.
Which I agree with. Even the MLPs are green right now. So the fact that you can't even find sellers of oil stocks, given what the underlying commodity is doing today, I think it points, it's another piece of evidence toward what Pete said at the top of the show. And so, yeah, I mean, the buyers have continued to prove themselves. The thing that I'm most focused on, as I've said repeatedly on the show, New York new cases dropped New York deaths rather dropped to under 500 today. That's from over 700 5 days ago. That number continues to improve from where I sit, and of course I'm biased. The New York numbers had to have declined in order for me to feel better and better that we've seen the worst in March, and that is happening. So I'm most hopeful that leads to a speedier opening of the economy, and I'm still mostly concerned of resurgence once we do get that recovery. That's really the main thing that I have my eye on.
So, Shannon, what do we do then in that context? Do we believe in this market? Do we think it's a sucker's rally that's just bound to reverse itself, that there's too much exuberance back in the market now? What are we to do?
I think you need to be careful about where you place your exuberance. So if you look at names that are trading down today, it's names like Macy's and L Brands. Those are companies that should be trading off here. They're looking for additional capital. They're not well capitalized. So what I'm hoping is that some of the resurgence that we see will benefit those of us who've been looking for high quality names, those that have been looking to improve their portfolios. Investors who are looking at companies who are well situated, even if we do get that resurgence that Josh is talking about, that they still have enough capital and enough business savvy and execution to be able to kind of move past that over the next 3 to 6 months. And so I think as long as the exuberance is well placed and we're not bottom fishing, I continue to think that there are opportunities in this market. And I think that investors who are looking at it from a more thoughtful perspective are being rewarded in days like today.